What's going on, guys? It's your man Henry, the Green Superman, here to help you get stupid rich. And on our path to getting stupid and rich, I figured I wanted to analyze what happened in the first 11 months of 2020 and predict some hot get-rich stocks for 2021 so you guys can get into them early. I'm going to make some assumptions, which is the future is going to be about the same when it comes to investing, meaning work from home, digital, electric vehicles, and internet-based businesses will continue to do well in 2021, which is reasonable because the pandemic numbers haven't really gone any lower or improved at all, and I'm not glad about that, but at least we can try to make some money and live our best lives, eh? I'm not Canadian, I just said A because I wanted to, я говорю по-русски, but I wanted to mix it up a little bit, so I said A. Anyways, before I jump in, make sure you check out the deals I have in the description, one of them being 4 free stocks on Webull ending today, which is a phenomenal deal, so take advantage of that, and let's get into it. I'm going to be using this article right here because they're the best performing stocks in the S&P 500 this year. However, I'm going to add some stocks that I believe are going to prosper that aren't in the S&P 500. So don't worry, I'll have a tech stock on the list that you're going to be really excited to see. And you already know the deal, guys. Smash the like button because I'm wearing my green shirt, which means I'm about to put some green in your pocket. The first stock you can see on the list is Etsy. I'm only going to include some of the stocks that I believe are good and not just follow this guide itself, but I first do want to start out with Etsy, and Etsy stock has jumped 10.7% on Black Friday. Black Friday was a bust for many stores, but amazing for online e-commerce. How do I know that? Well, the Wall Street Journal told me on Black Friday, online sales hit 9 billion, up 22% from last year. Meanwhile, foot traffic to stores on Black Friday fell 48% this year from last year. We're in the middle of an Etsy Cyber Week sales event, which runs from November 23rd to December 2nd. This 10-day event is actually longer than last year's 8-day event, and this online shopping spectacle basically suggests that Etsy is leaning into this year's increased consumer focus on e-commerce options. The discounts include several million product listings, and they run as deep as 60% off on select items. I feel like I'm running a commercial for Etsy, but you get the point. They have really good deals and people are gonna do a lot of shopping. And guess why this is going to be a stupid rich stock in the next quarter after the sales come in? Reason number 1, are you married? If so, you might have noticed that your wife really loves to spend your money on jewelry, bags, clothing, home decor, and furniture, and all of this stuff which women love. And statistically, women spend about 85% of the money, at least amongst millennials, so this is really going to benefit Etsy. They have a very big niche in the market catering to millennial women, so if you want to invest in your girlfriend's or your wife's guilty pleasures and spending habits, well, you don't have to look any further than Etsy. Friday surge supports Etsy's fantastic returns in 2020. The stock has now gained 228% year to date. The stock isn't cheap at 85 times trailing earnings and 13 times trailing sales, but you can't argue that Etsy's skyrocketing sales are a really big boon to the company. Revenue specifically, and I'm sorry I'm getting excited, I'm just excited about the stock, it more than doubled in the third quarter, and February's fourth quarter report will show exactly how big Cyber Week turned out to be for this year. As a reminder, Cyber Week of 2019, which was last year, was Etsy's biggest sales event to date. If the holiday sales come in as juicy as they seem to be, then I could see the stock going up to about $200 per share. Next, I actually want to skip down to PayPal here on the list. And in my view, it's actually a marriage of PayPal and ARK Invest's baby, Square, which is the second biggest position in the RK fund. Mobile payments are popular and growing in 2020, especially amongst young people. 91% of millennials have made a mobile payment in the last year, so it's no surprise that PayPal stock is getting a lot of attention on Robinhood. The fintech giant combines financial expertise and technology to make money with the biggest future spenders of the US economy, which, as I already mentioned, is millennials. Well, specifically millennial women, but millennials in general are going to be the biggest spenders in the US economy very soon. PayPal's long-term strategy relies on digitization of the global economy and the increasing popularity of mobile wallets, which I suspect will become way more popular in 2021. According to CEO Dan Schulman, PayPal will benefit from these megatrends because its trusted brand and its scale. So taking a look at this chart that I have right here, which is the year-to-date returns for PayPal and the year-to-date returns for Square, it is looking very interesting. So taking a look at the chart again, PayPal has nearly doubled at 95%. Well, Square, however, said, step aside, son. I'm gonna take people to the next level and make them stupid rich. And that it did. And I need to discuss a number of reasons for Square looking this juicy at 239% versus PayPal, which, by the way, is nothing to sneeze at, 95% returns year to date in 11 months is a fantastic return. Number one, Square has a very powerful network effect, and I mentioned network effects on the channel before. It's basically when more people are coming onto a platform, making that platform better. So in terms of Cash App, which is owned by Square, the more people that go on Cash App, they ask their friends, hey, are you on Cash App? I just want to pay you for that pizza. And the people are like, I don't have Cash App. And the guy's like, well, I'll refer you. You get $5, I get $5, get on Cash App. And the more people that join Cash App, the more they refer their friends. That's very similar to Uber. It's very similar to Facebook, because as your friends go on Facebook, you're going to add a Facebook account as well. And basically this is very good for Square's ecosystem because Cash App is really growing quite fast. Square actually boasts 30 million customers who use the app 15 times per month, which is pretty much every other day. And guess what? My Cash App is actually called Square Stock. I can't believe I actually got that name and it wasn't taken. At the same time, those using the Cash Card has jumped to 7 million, up 50% year over year. There's also been a surge in Bitcoin use, which is gaining a lot of momentum. I decided to put $200 into Bitcoin a couple weeks ago, and guess what happened? I single-handedly moved Square Stock by myself. Just kidding, Square said Bitcoin revenue surged 1,100%, so it couldn't have just been me, it was probably me and you at the same time. It went up 1,100% in the third quarter and represents 79% of Cash App's revenue of just over $2.07 billion. This all suggests that the demand for Square's services will only keep increasing because the business and consumers are going to continue digitizing the economy. The potential for shares to double over the coming years seems very likely to me, and I can totally see this stock going past $250 per share. So I believe PayPal and Square are both going to crush it. I can see double-digit returns or even a triple-digit return for both of them next year. Okay, so the next stock I have is a secret, so I can't tell you. I mean, it's a really secretive company. Do you really want me to tell you? All right, I'll tell you. It's in the growing industry of data analytics, and I'm able to bring up my very favorite saying, which is Andrew Left is not right, because it's the controversial stock Palantir. Andrew Left, who is not right, don't forget that. You cannot forget that, guys. It's smash the like button, you can't forget that either. And Andrew Left of Citron Research reported a short position in Palantir not long ago, and the stock has skyrocketed from $10 to $27 per share. Now, I do want to caution you guys that there may be a better entry price into PLTR because it is currently at an all-time high. Palantir continues to perform incredibly well, but that doesn't change the fact that it's priced for massive growth. Just take a look at the stock. It looks like Palantir bought a Virgin Galactic ticket to space, and you know, guys, that ticket costs $200,000. So Palantir must obviously be able to afford tickets to space, which means that they're probably raking in that dough. Palantir is interesting and risky because it's similar to what happened with Facebook and MySpace. Either it's going to dominate and grow massively, or it's going to have a tough time making a decent profit for its investors. MySpace, which you can add me there if you want, but I suggest you add me on Instagram right here, the largest worldwide social network from 2005 to 2009, never truly figured out how to monetize its user base. I mean, it was putting way too many ads, it was becoming uncompetitive and losing its user base because it was mismanaging the business. Facebook, on the other hand, managed to efficiently and thoroughly monetize its user base and is now near a $1 trillion company. I mean, Facebook is killing it. It has incredibly strong cash flow. Since its post-IPO lows, and by the way, on the very first day of trading for its IPO, I believe Facebook fell something like 30 or 35%, but the company has since returned from its IPO date over 10 times to shareholders. Palantir is still in its early phases for profitability. Your boy right here is bullish on the stock though, due to Biden taking office. You see, Biden's victory could potentially reduce military spending, and the Defense Department is already one of Palantir's biggest customers, and the budget cuts could drive more business to the company's lower priced software from traditional providers currently. We've already seen the IPO prospectus. Palantir sees itself as the central operating system for all US defense programs, which is a very great thing for the business. It's also co-founded by none other than the PayPal entrepreneur Peter Thiel, so the man knows exactly how to grow profitable companies. That makes me confident this company has a bright future, and the stock could potentially see a rise to $50 per share if they continue to win more business and more contracts. Did you guys like my analysis? Should I do a part 2 to this video? If this video gets 1,000 likes, I'll definitely do that for you. Thanks for watching. I love you guys all. I'll see you in a video very, very soon. Be aggressive in learning, but be safe in investing.
No one ever sees me.